You need to know the details of the $3.5 trillion spending plan that's going through. You also need to know about what the Federal Reserve owns and why this is extremely important to the bond market and, of course, connected to the stock market as well. The third thing I want to look at is the economy. There are so many economic effects that are taking place, and you need to understand how that all pieces together. There's so much I need to jam pack into this one. Let's go. On Tuesday's trading session, you could see the S&P 500 and the Nasdaq closing at records ahead of the Fed summit. You had stocks like GameStop, GME surging 27% to lead the meme stock rally in an otherwise boring market. At least that's what they say. Now, I found this quote to be a little bit humorous, so I wanted to bring it to you. Investors are, by the way, they say the word horizon twice. Check this out. Investors are looking at the horizon at the big Jackson Hole meeting on the horizon. Anyway, but for now, the feel good from yesterday's news is still in the air. That's right. Yes, of course, we could get some really, really bad news at Jackson Hole, being the Fed taper, but we're kind of just looking for the good news right now. We want to ignore that bad stuff. That is the reality of the situation that we're dealing with today. My goodness. Democratic-led House authorizes $3.5 trillion of spending as national debt climbs to $29 trillion. The amount of spending seems to never cease. There is never a reduction in spending. There's never the chance that you're going to get a new Congress in, you're going to get a new leader in, and things are going to get lower and things are going to get under control. No. All right. So basically, they were able to secure yes votes from the 9 moderate House Democrats for the resolution, which expands the social safety net in the U.S. with new federal programs. They discuss what those are in here in depth. Obviously, I'm not going to be able to read it all to you, but understand what's happening here. You, in the middle class, will pay more taxes. I'm telling you right now, this is all being laid out in front of your eyes. Trillions in new tax increases on working families and small businesses. This budget resolution is the first step to raise taxes by $3 trillion over the next decade. Some of the taxes include, check this out, increasing the corporate tax rate from 21 to 28%. Everybody knew that was coming, of course, nothing new there, which will be passed along to working families in the form of higher prices, fewer jobs, and lower wages. This will give a U.S. a combined state federal rate of 32%, higher than the foreign competitors in China, which has a 25% corporate tax rate. There's more to it than that, but anyway, I'm just giving you the information. At least 2 million small businesses will get hit by the tax hikes. This includes over 1.4 million small businesses organized as C corporations, family-owned farms impacted by the repeal of a step up in basis, and pass-through organizations which will be hit by the increase in the top marginal tax, 39.6%. There is more in here, but essentially you got to understand it's not linear, and don't ever take what they say in their talking points as being the reason why things are going to be going up or down and so on. My goodness, please. There's always more to the story. I'm bringing you just a piece of it. I'm going to show you what's happening with commodities. I've got more information here, but first, the Money GPS Insights. All right, first things first, understand that there is going to be $3.5 trillion more spending that's going to take place. Let's be honest here. The suggestion that this is going to end well is absolutely ludicrous. If you break it down simply, this is inflationary and investors should prepare accordingly. Prepare for inflation because it's coming through. This doesn't have to happen through the Federal Reserve and the quantitative easing, expanding the monetary base, expanding the balance sheets. This can come through price increases. This can be through any number of means, but when you have helicopter money, that is in fact fact inflationary. There could be deflation in assets, but of course, inflation in other places. So let's take a look at this. This is the CRB commodity index, something I showed you just recently, and it has popped higher. You can see right now it has gone up. And this is something that has been happening over the period. I had broken this down in TradingView to give you a clearer look at it, but essentially just want to show you that this is moving back up. Depends on the commodity you're looking at. Just take an example of lumber. Lumber's at 475. It used to be at 1700. But of course, you see other commodities that have performed very well. It all depends, and there's always going to be ebbs and flows on the daily markets. I found this to be interesting as well. You are seeing the Richmond Fed Manufacturing Index month after month after month. This year, it was doing better. Okay. And then suddenly, this had contracted significantly. It was at 27, now at 9. Just to give you a little bit of context, I'll pull this back to the 10-year, and you could give yourself an idea. It's always fluctuating, but after moving up significantly through the period, now it is moving down, and it looks like, quite a heavy contraction. So I will give you an update on that soon. But of course, this is important because manufacturing, while that manufacturing base is definitely shrinking, wherever it is, it just shows you what's happening with the economic engine within that country. Now, you're seeing the new home sales. This is shocking to see how little there are. Of course, that's coming off of such a high point back in 2020. But overall, I just want to give you the clarity here. This is pulling back the 10-year, and you can see that this has been increasing year over year over year. Okay, there's more demand for these new homes to come into the market, but it has come down significantly from the peak of 2020. Okay, I just wanted to show you that. And this is part of this. New home sales tick higher as prices hit record highs. Okay, so the price is going up. The amount of homes being built are ridiculous at this time. But ultimately, will there be an oversupply like we saw back during the housing crisis? And then we move into this. Treasury sales under scrutiny as foreign demand rises to record. Okay, I want to really unwrap this, okay? Global funds snapped up 38% of the US 10-year sale this month. One potential reason is that central banks are reallocating their FX reserves, their foreign reserves, all right? So it gives you a full analysis here. Now, it was the biggest proportion in over a decade, as they say, but let's take a look at this. First of all, the chart. 10-year auction allotment statistics show foreign demand at a decade high. You could see the dealers and brokers, that's black. You can see the pink line, investment funds. Both of these are down, okay, just recently. However, foreign and international increased significantly, okay? Huge jump, okay, huge jump. So then you look down at the bottom here, they got these 3 points. Various theories have been bandied about as to whether what drove the sudden influx. One was that foreign central banks were the major bidders as they sought to reallocate their foreign exchange reserves, very important, due to a decline in the availability of treasury bills. That's one thing. Another reason that has been mooted was a step up in the Chinese demand, always huge. Chinese demand after the currency reserves climbed to the highest since 2015 in July. Recent tweaks to a Federal Reserve repo facility have also been cited as a possible driver. So there are many reasons for this, okay? And then, of course, you have the last one. Central banks and official money may be at the forefront again, as they often prefer to buy shorter maturities due to their lower volatility. On the other hand, foreign investors have recently shown a preference for refunding sales, including longer maturities such as 10-year notes. Now, the 10-year is something that you need to understand a little bit. I want to show you this if I have it right here. Look at this. The Fed owns over 60% of the 10-year treasuries outstanding. That's insane. Yes, the Fed owns nearly 2/3 of the single most important bond in the world add up the amount that everyone else on the planet owns, and it's a little over a third. And people are still using this bond to predict inflation. This bond doesn't predict anything other than the Fed's activities. The Fed has effectively cornered the market on this bond. So I'm just showing you here. You see the news, you see the Bloomberg article, but when you break it down, you peel one layer back, you start to understand things at a different level. Now, we talked about China. I wanted to highlight this right here. Look, what's happening in China, you're seeing their tech stocks, which surged. I don't know where they are right now. I could look at that live, but they had surged, okay? I think it was Alibaba and JD and all these other ones. I thought it was interesting because it came at a time when there's an abundance of reasons to not like what's happening. It could be purely speculative. China's biggest companies are starting to make a habit of giving away their earnings. They give you an example here and just try to make excuses for why this is happening. But I think what we're seeing here is a share the wealth mentality. If you want to be a billionaire in that country, oh my goodness, you're going to have to pay the price. Okay? You're not going to get to reap all the rewards of that, no matter how good you are, no matter how much you donate, all these things. There is going to be this share the wealth mentality. And some people might say, oh, that's fantastic. But is it all fantastic when one single authority can control what happens on so many different levels? Remember, you got to take it all. You can't pick and choose, right? That's what they're doing today. There is more in here, but that was the point I was trying to make. This is scary to me. I'll just read it. U.S. food suppliers are having trouble keeping shelves stocked. Lack of workers leads to late deliveries across the supply chain. Cisco says the volume of orders exceeds its capacity in some areas. There are different things going on here, but people. Watch out with the food. Please, if you can, grow a garden. Grow a garden, please. Have some storable food. There's nothing wrong with having some storable food. You can get you can get it at Costco if you want. Have that stuff ready to go. You never know what's going to happen. And this right here is from FreightWaves. Love this website. Essentially just talking about how long it takes. One of the problems I should say is that we have apparently a lack of actual shipping containers. So not only is there congestion and problems at the ports and so on, the actual shipping containers themselves are in a shortage today. And they're talking about how long it takes to build one, how long it takes from when you order one to get one. Apparently in normal times, it would take 6 weeks, now as long as 4 months. So I just wanted to show you that things are changing all along the spectrum. And I'm just trying to bring you the entire spectrum to hopefully educate you as I go through my own education. I am a student in all of this, and I hope that you do appreciate that. I'm trying to give you every single level, not just the tickers. Okay? All right. All right. This right here is the insiders. If you aren't aware of it already, you probably heard me rant on about it. It's my way to connect to you directly. Okay, that's the way we're going to do this because I want to get around their systems. Their systems have shadow banned. Their systems have made it difficult for me to simply, for you to get notified. Okay, if you don't have that, subscribe and the bell and all that, you're never going to see it. But this is the way to guarantee it, and that is to sign up to the insiders. It's totally free. 5 times a week I email you the video of the day. You can get that at this card up here or at themoneygps.com. If you want to support this channel right here by clicking the like button, you will make a unicorn smile. All right, just like that. Hit that like button, and if you haven't seen this video, definitely want to check it out. Click it, and I'll see you there.